Welcome to this week's Market Minute. I'm Cody Moore with Wealth E&P. Now that we are about halfway through this election year and headed into the final stretch before November, today I want to take a look at some historical data that will help answer some questions on whether or not we should base our investment decisions and methodology around different opinions in election results. So this first graph that we're going to take a look at here we'll answer a question that we've gotten plenty over the last few election cycles, really, on whether or not you should move certain assets to cash until the election's over, or wait to invest until an election's over and depend on which party wins. So these two smaller lines on the bottom here are going to be if you had only invested during a Republican president or if you had only chosen to invest during a Democratic president. This much larger line going up into the right here is going to be if you had just stayed fully invested throughout whatever political party had taken office and not based your investment decisions around that. So based on this data, it would seem to be better to just stay invested and not try to time markets and things like that around elections. Another question to be answered here is whether or not markets will react better to a Republican or a Democratic president. And based on this data, it shows us that markets don't necessarily care whether it's a Republican or a Democratic presidential candidate that gets in office. But mainly, as we've spoken about before, what markets care about is certainty. So they do not react positively when the president and Congress are united, whether that's on the Republican or Democratic side. What markets do like is a split between the presidential party and Congress. And really that boils down to markets having that certainty, large corporations in America being able to plan for the future and have some predictability there. So easy segue there into corporate profits. As you've heard us say over many years now, fundamental economics ends up being the most important thing over time. And as you can see here, after-tax corporate profits, corporate earnings, and the S&P 500 are not one-to-one correlated, of course, but fairly strongly correlated over time there as related to the S&P 500's returns. So if you have any specific questions around the elections and our predictions for this year or anything else, as always, feel free to reach out to us at wealthep.com. Thanks, and we'll talk to you next week.